I wanted to share some thoughts with you on discussions that we've been having at JMFIN at our monthly stock selection meeting. The current crisis is no doubt changing the investment outlooks for each and every sector that we look at. Some will gain hugely from this crisis and some will be impacted severely. We're looking at the market leadership today as those stocks and sectors that are driving markets higher, especially in America. We can see that these types of sectors will be deemed to be the new economy going forward. Some of the older economic sectors, such as banking, mining, oil and gas, which contribute quite a lot of the makeup to the FTSE All-Share, for example, can be deemed to be the old economy stocks. These stocks have an uncertain future. They have significant amounts of debt on their balance sheets, and indeed many of them have now stopped paying dividends to their shareholders. We're looking at companies and sectors with a 3 to 5 year view at least, and certainly many people will be familiar with those well-known names in the American market that have seemed to have the stars aligned for them during this crisis. The likes of Amazon, Microsoft, Alphabet, Netflix, to name a few, have all had a very successful crisis, if I was to say that. As online delivery comes to the fore, as does cloud computing, and all of our needs are addressed in some shape or form by the cloud and data storage. Some other companies out there, namely Ocado and other food delivery services, have very much been some of the winners in the current crisis. Also, the way that we communicate has changed significantly, with many people now remotely working from home. Zoom technologies in America, I think we've all got used to the Zoom calls, some more than others. But certainly this crisis is going to mean that working environments will change, and we will get used to more Zoom calls or more WebEx calls and less international travel and domestic travel. These will have huge implications on some of those sectors in our market. So, although at the moment the outlook is very uncertain, we are trying to take a positive outlook for clients at JMFIN as we will emerge from this crisis. But we believe we need to have a lot of exposure to the new economy stocks and sectors that will come through stronger from this crisis. Healthcare will be another very important sector to analyse, not only from human health, but also for animal health as well. Other areas to note will be online security. Clearly, we're all going to be using technology and our laptops and tablets a lot more, so we want to feel safe online. Two of the sectors we looked at recently within the stock selection meeting was real estate, which clearly is going through a fairly seismic change with its investment outlook. The chief executive of Barclays said recently that he thinks gone are the days of having 7,000 people cooped up in one building in Canary Wharf. Now, this may mean that the bankers leave Canary Wharf at some point, but as with all crises, the opportunities will arise as well, as some of those buildings may turn into affordable homes, or indeed flats will form part of the makeup of those buildings. Regeneration of the area and also a potential solving of our housing crisis might be well received by many of the general public. We're very much seeing market leadership dominated by the new economy type of stocks. The old economy stocks are lagging, quite rightly, due to growth concerns and also other competing technologies, whether it be fintech coming up against the incumbent banking sector, or new alternative sources of energy, such as hydrogen fuel cells, or indeed solar or wind, to potentially take the place of hydrocarbons over the next 20 to 30 years. So to sum up, we are quite excited about the future ahead for investors, as opportunities will present themselves in some very exciting areas. This, coupled with the continued struggles of the old economy sectors, which will certainly need to step up to the plate to ensure that they have a role to play going forward. But we believe that portfolios looking ahead for 5 and 10 years should now have less exposure to some of these businesses.